What's going on, guys? Are we looking at one of the biggest pulls of the year to date, right? So we have been on a massive bull kind of rally here to start the year in 2023. Now, there's a lot of people out there that are thinking that, interest rates are kind of already baked in. We're already expecting that 0.5 or 0.25. What's really going to happen? How much is it going to sway the market? And is the pain finally over? But I want you guys to kind of think about something as we start to head into Wednesday and Thursday, because we could be looking at a dramatic rug pull. And I just want to make sure that everyone is kind of, up to speed and up to date. But be even more so, right? Even more so than what the Fed is going to do this week. I think the bigger thing that we need to look at is the massive earnings, right? So tech earnings are getting underway here today. After the bell, we're going to be looking at AMD. We've got a lot of other mega cap stocks coming in to report this week as well. That's one thing that I think is going to really determine whether that bottom is kind of in now and we're going to slowly grind to get out of this, or we're looking for that extended leg down. What I'm going to be looking at here is the SP 500, right? So we're looking at the ETF. We want to see the price action. Right now, we've got that room still. We've still got that ceiling at around $408, $410. It's something that I want you guys to all kind of be aware of. Now, I am not a bear and I am not a bull. I am just a day trader. I'm going to try to find whichever way that I can get in and make some money, right? So I'm always doing technical analysis, but the reason why I want you guys to really focus in on this video and watch all the way to the end is because we need to kind of zoom out. Sometimes as traders or swing traders, we get stuck in looking at such small time frames and we don't kind of zoom out and look at the rest of the chart. If we kind of take a macro overview picture and look at the weekly time frame on the S&P 500, we are still in an overall downtrend. As good as a run that we've had this year, don't get me wrong, I've made a ton of money this year, this year, 2023, the last 2 to 3 weeks, going long on a lot of stocks, catching some of those stocks into rising support, kind of taking them through previous days highs. The run has been phenomenal, right? It's lasted 3-4 weeks now. We've been coming off the bottom. We have not made any new lows going all the way back to October the 10th. We really kind of, whether retail or, the market in general kind of, capitulated down at that point. But the last low point that we had was around $348 on the S&P 500. So if you kind of look at how far we've come in the past 3 months, we're essentially on about a 30-point run here a 50-point plus run here on the S&Ps, right? So this is a fantastic move, especially for people that have been feeling a lot of pain, in 2021, 2022, and depending on what sector or industry you're playing. If you've been playing small caps, it's been closer to 2 years. My heart kind of goes out to those people who, really invested in those high speculation, high growth names. But if we kind of zoom out here and we're looking at this picture, if we kind of look all the way to the left of the screen here, those highs that we had at $479 going all the way back to that January, right? If we kind of look at where we were at in that January of 2022 at 479, that's when the decline really started to happen, right? So we had a week down, we had, a little bit of distribution, a little bit of sideways action. And I want to kind of point out to you guys, as soon as we made this first leg down here, we kind of caught some support down at the linear regression channel 50. If you guys are kind of curious about all of these lines that I use on my chart, you guys can ask me personal questions in Discord. That link is down below. I'll be happy to answer them. So I'm just kind of move this video along so I don't have to really explain exactly, every single line, because that video is going to take, a tremendous amount of time. But as we came down into that support, right, if you're looking at these channel levels and you're looking at that linear regression level, you can see, we're going to be able to catch some support here. Can the bulls kind of hold this area and push higher? Now, before we get to present day, I want to kind of, explain something, right? So it was during this time here in March, right? In March of 2022, when, we found that support, we started to go on a 3-week bull run, and a lot of people were thinking we're just going to come back up and make new highs. It's going to be business as normal. A lot of people got trapped here in March, okay? If you kind of go back, what were you doing trading in March? What were you holding in March? How much pain did you really go through last year in March, right around that time, right towards the end of March? If we look at that, if you can kind of see here, if those highs of 479 were kind of put in, right? And then we had from January all the way down until March, we had about a 2.5, 3 month kind of pullback, right? So we pulled back for those 2.5, 3 months. We started to go on a little bit of a rally, 2 to 3 week, 4-week rally here. And as people started to think that we're going to come and make those new highs, the market gets slammed yet again, right? We're raising interest rates. It's every week. It's something new with the Fed, earnings this, earnings that. It's always something, right? So as we started to pull back again, you can see here realistically in April, we started pulling back all the way until, kind of that June, July, right? So we're looking at another 2 to 3 month pullback. Right, and I'm going to make a very valid point here that I want you guys to kind of understand, right? So if this pullback lasted about 2 months, this rally lasted about 3 weeks, if this pullback lasted 2 to 3 months, right? What did the next kind of bounce last us, right? We looked here, realistically in July, we started to kind of base out here, and it was going into August where the market really started to kind of shift, and we got on another little bit of a bull dead cat bounce, right? So 1, 2, 3, 4, 5 weeks, which is just about over a month worth of trading, where we kind of had that nice bounce, that little bit of breath, and people thought, okay, now this is the bottom, okay, it's finally over. But if you kind of go back to what I mentioned before, we ran right into this channel level that we held the first time. If you know anything about technical analysis, always, guys, you're always going to have break and retest. You're always going to have supports that when lost now turn into levels of resistance. And that's exactly what happened here the week of 8/15, right? If we kind of go back, look at your weekly chart, go to the week of 8/15, look at exactly where we ran into and where we kind of stopped before we pulled back. Now let's keep going on. Let's go down this timeline. If we really look at August, right, we started to really get that, resistance, and we started to fall from August all the way to the next bottom here in October. Guys, another 2-month decline, right? Are we starting to realize the trend that's going on? It's now at this time that people, full-fledged know that, this is a bear market. This is going to be longer than, the 2020 kind of drastic quick pullback and then massive ride, right? A lot of people have left the market. A lot of people, and especially day traders, have exited, right? Who's left now is people that really took the time and opportunities to kind of learn the markets and really, got interested on a deeper level than just the people looking to make a quick buck. And obviously our long-term investors, right? I feel for a lot of longer-term investors. Some people's portfolios, if you're trading blue chips or been holding blue chips, are down, 30%, right around 35%, maybe 40% at highs, depending on how much speculative names that you put in there. If you went completely on growth and completely on speculation names and things that were running, your portfolio could be closer down to 60, 70%, at the peak, right? So just kind of keep that in mind. We're starting to notice a trend here. Each pullback, each leg down is lasting anywhere between 2 and 3 months, and each kind of dead cat bounce is lasting anywhere between 3 and 5 weeks as of now, as of October of 2022. If we look at the next bounce that we started to get here going into November, right? And again, guys, I hope you guys are still here, and I hope you guys are following along. As we started to get the bounce here going into November, we got a 1, 2, 3, 4 week bounce, guys. Are we starting to know and realize and understand the trend here that's going on? As we got these bounces, you'll notice if this is our high here at 479, we had our drop, we put in a lower high, okay? We had our next leg down, we bounced, we put in a lower high. We had our next decline, which is currently sitting as our low. We had our bounce, and what do we have, guys? A lower high, okay? So as we've had this new rally and it's a new year and people think that inflation is coming down, they're going to start to ease and go a little bit more dovish. Are we going to be, what is the Fed, what is Powell, what are they really going to do, right? And this is why I trade pure technicals, because if I let myself and I allowed myself to get indulged in all of the noise, in all of the news, in every single interest rate hike, or keep tabs on everything that goes on with inflation, I would essentially be trying to time the market, and more times than not, you're going to be wrong, especially when you're trying to time the market or when you have these expectations, right? Listen, everyone's going to have an opinion. Don't get me wrong. I have an opinion as well. But the saying goes, opinions are like what. Everyone has them. Your opinion doesn't matter. My opinion doesn't matter. All that matters is price action and data. Whatever is going on these charts, whatever someone is willing to pay for the price of the stock is what the stock is fair valued at, okay? Whatever the market thinks that we need to do, the market is going to do. It doesn't matter what you think. It does not matter if earnings come out and they're great. How many times have we seen a company come out with great earnings and they sell the stock? How many times have we seen companies come out with subpar earnings? Maybe a miss here, maybe, not living up to expectations of what the analysts thought, and the stock explodes, right? The market is going to do, and the market is going to price in what the fair value of what the market wants, right? So it's our job to just identify what is exactly going on here and try to be on the right side of the trend at the right point in times. So if we kind of look here, to be honest, the SP 500 is realistically not out of the woods in breaking this downtrend until we can get back over $420. This week is probably going to be the biggest week that could solidify whether the market is going to now finally push up, or we're going to go on another drastic 2 to 3 month decline. If the narrative stands and the trend stands, guys, we are looking at another 2 to 3 month decline and potentially putting in a new low. Now, if that happens, and if that's the case, and we do start to pull back, caveat, and we do not put in a new low, going all the way back here to the week of October the 10th, if we do pull back off earnings and we do pull back off this Fed meeting, if that happens and we don't put in a new low and we start to base, that could be the bottom, okay? That could be the bottom, okay? However, if we go on a 2 to 3 month decline and we have that next pullback and we do drop below those October 10th prices, this leg down is going to be 2, 3, 3.5 months before we finally start to see a basing out process. Where exactly would that take us in the timeline? We'd be looking at February, March, April, maybe taking May to kind of, start to consolidate, go sideways, and in June, July to start coming up. And then we would be looking at August, October, November to really start to rally, right? To really start to rally. So if we do make a new low, if you are an investor, what price would you realistically be looking to kind of get in at rock bottom to have, a best average price? You would be looking for early to mid-summer to start kind of accumulating and adding into those shares. I'm just speaking on facts. I'm speaking on data. I'm not giving you guys any type of speculation here as to what I think is going to happen. All I'm giving you is what has happened and how we can kind of plan for what does happen, if that makes sense. Now, if the market completely explodes and we do close over $420, this very well indeed could have been the bottom. Okay, that could have been the bottom, and I hope you've bought, and I hope everyone is going to make a tremendous amount of money here in 2023 and 2024, but that's one thing that we need to look at. We have not really broken and started to build above this downtrend. all since we've started this drop, from $480. We got pretty close here on that first leg where we were, maybe going to break that short-term downtrend, and then we got pulled, okay? We did not get close here. We never closed over the 50-day moving average here when we kind of look at this August area here of 2022. We got this next drop. We never got close here back in December when we got up to the 50-day moving average. Now, for the bulls case and the bulls defense, we are officially over the 50-day moving average on the weekly time frame. This is bullish in a sense. This is bullish. Now, the last time that we lost a 50-day moving average after reclaiming it was back here in March, right? If we go all the way back in time, and please, I would advise you guys to go back in time, look at March of 2022 and kind of see exactly what I'm talking about here. When we reclaimed the 50-day moving average, we went on a 2-week run-up. We reclaimed the 50-day moving average here, and we're on a 2-week run-up, okay? When we re-lost the 50-day moving average on the weekly time frame here in April, we went on a 2-month decline, okay? So if we do lose this 50-day moving average yet again, history has proven to us that we could be on another 2-month decline. 2 to 3 months, guys. So just kind of keep that in mind. If you're a trader, you want to be more short biased if we do start to close below that 50-day moving average. However, if we continue to build over this weekly 50-day moving average, then we can potentially call this the bottom, right? Quote unquote, call this the bottom and be looking for, some continued upside, and especially more continued upside if we get over $420. That $420, if we start to close over that, could realistically, very, very quickly, within a matter of 3 to 6 months, take us back up to all-time highs of $479. And I know that sounds crazy, but we've got nothing but open airspace up here. Guys, I hope you enjoyed this video. I hope I'm giving you guys a little bit of clarity and some little bit of technical analysis to kind of take into this week, because this week is going to be huge when it comes to what is going to happen in the market over the next 6 months. Stick around, subscribe, join the Discord. Make sure you guys drop me a comment. I'll see you guys all. Stay safe out there and have a blessed day.